Alright everyone, welcome to the channel. My name is Cowboy Trades, and in this episode I'm going to be discussing the benefits of using the E-mini futures for the S&P 500 index. These are going to be extremely useful if you enjoy trading the stock market or crypto in the evenings when the traditional markets are closed. So let's jump right into this. I'm going to answer this how-to with two different segments that I'm going to timestamp down below. Number one, what are mini futures? And number two, how are they useful? So diving right into this, number one, what are the mini futures? Well, the mini futures are a series of micro contracts created by the Chicago Mercantile Exchange, also known as the CME Group. I'll leave the link down to this down below. For this episode, we're only going to be looking at the S&P 500 E mini futures, but there are also mini futures for the Nasdaq, the Dow Jones, and the Russell. Now, these E mini futures offer a more accessible way for future traders to profit from the volatility in the stock market. For the S&P 500 mini futures that we're going to be looking at today, these do this by offering futures contracts that follow the price of the S&P 500, but they do this with a reduced contract size that is 1/5 the size of standard S&P 500 futures, which basically means there's going to be a lot more room for retail to jump in there, and this is another reason why this is a highly liquid, cost-effective way to gain exposure to the S&P 500 index. So number two, how does this benefit us and why do we care as traders? Well, because these mini futures offer more flexible trading hours, they operate Sunday to Friday from 5 p.m. to 4 p.m. Central Time, which basically means traders can make bets on the direction of the stock market after hours, and we can see in advance if bearish news will affect mini futures, which will most certainly bleed into the SPX. Other things that can affect the mini futures before the stock market opens are things like it says down here, job reports, quarterly earning reports, speeches like with Jerome Powell, and any releases or statements made by the FOMC. Which means you don't have to be a future trader to benefit off the extra hours of the E-mini futures for the S&P 500. Let me show you why. If we jump into two different charts here, over on the left side of the screen, you can see I've also wrote this in text, so you can differentiate between these two because they do look very similar. This chart here on the left is, of course, your traditional SPX. The ticker symbol is SPX. This is the S&P 500. Moving on to the second chart, we have the ES1, that is the ticker symbol, and this is the S&P 500 E mini futures. Now, right off the back, you can see, these both form the same patterns, they both do the same thing, and if you look at the valuations they're at, they both relatively stay at pretty much the same rate 95% of the time. Now, here is why they're useful. We all know the S&P 500 closes at 8 p.m. So over here, you can see this was over on the SPX chart. We closed round about 4,005, and then the next day we gapped all the way up. This was the 9th of September when we reopened the next day at 1:30. Now, we were all the way up here at 4,030. And you might be wondering, or you might be thinking, there's not really any way to be able to anticipate these price gaps to the upside, but let me show you why that's not the case. So we had a price gap of 0.6% or 60 basis points, and once again it's hard to see here because we're looking at the 15-minute time frame, so it looks like this was a relatively short-lived gap. But if you look at the bottom of the screen, when I put my cursor over this, you can see once again this is the 8th of September at 8 p.m. then the next candle is the 9th of September at 1:30 p.m. Then let's head over to the S&P 500 mini futures, and also I just like to highlight this, there's a box here for the there's a box here for the closing, and then there's a box here for the opening of the next day, and once again massive price gap in this. Now let's look at what happened in the S&P 500 mini futures. Now what I've actually got over here is this is once again the same level at 8 p.m. on the 8th of September, and then you're looking at the next candle and you see that this is actually just 2 hours later on the 8th of September. So what happened here is, once again, like I said, the E-mini futures do trade after hours on the stock market, and what you can see is the E-mini futures called for this massive run to the upside. And what I've highlighted over here, you can once again see that there's a green box here. This is the close, and then this green box here is the opening. It's the same here. This is the close for the SPX, and then up here, this green box, this was where the SPX opened. So the traditional stock markets opened after the futures called for this entire move. So when we're looking at, this big price gap, and you might be wondering, is there any way to decide whether new bearish news coming into the market is going to affect the price of the S&P 500 and then subsequently the price of Bitcoin? Because we know the S&P 500 is the leading indicator for Bitcoin, and yes, we now know, obviously looking at this, the S&P 500 mini futures, they operate after hours, and if we do look at the deviations between the actual SPX and the S&P 500, you will notice that they really don't deviate whatsoever. So if I overlay the SPX, no, this is the SPX, so I'm going to type in the ES1. You just want to type new pane on this one, put this one down here. So right on the top here, what we've got is the actual SPX, the actual S&P 500 index, and then beneath this we've got, once again, ticker symbol ES1, which is the S&P 500 E mini futures. And when we do overlay this, like you can see, sometimes if we get the correct ratio for this, there we go, you can see they bottom at the same time, but sometimes, because the E-mini futures trade at 1/5 of the contract size, there is sometimes a slight premium on them. For example, right now, if we do actually head over to the E-mini futures for the S&P 500, you can see we're currently trading at 4,070. However, the SPX is trading at 4,050. So yeah, that's all I've got for you, my friends. Like I said, there's really not too much else to it. This is once again just a great way to see what the direction of the traditional stock market is, and then, for example, if you see a big dump in crypto or you see a big dump in the mini futures, that might be some signals that there's some bearish news coming out, and then you can look into that yourself. But that's all I've got for you today, my friends. I hope you did enjoy this update. This was, once again, just one singular episode out of my educational series. So if you do want some more free educational crypto content, be sure to head over to my channel, click on playlists, and then head over to my educational series. So if you like the content, be sure to like and subscribe. All I've got for you today, my friends, as always, Cowboy out. Peace.